Good afternoon. Good afternoon and welcome everyone to the live Q&A webinar. Sorry for the delay. As you guys know, we're modifying the interface, so sometimes it takes a minute or two to load. All right, so to begin with, we're going to have the agenda presented with the structure of the webinar. So before we're going to begin with the webinar, we'll understand how it happens. So we'll have the previous questions, the dynamic questions, the link information, and webinar privileges. This is a layer where I'm going to send you some information here. You see this in this slide. It's a bit more informative, but on this we have the questions, and here I'm going to paste the questions from you guys. And the biggest benefit of this webinar is that it lets you, good day to you too, that it lets you ask the questions and see the answers on the screen. It's not such a usual concept, and you can take advantage of it and just, yeah, okay. So this is basically how it goes. Analysis, we're always leaving it to the end because most of the questions do address analysis from different angles, which is more interesting than just looking at the examples, but we'll begin and see how it goes. Any capital markets and trading information disclosed in this webinar is provided for informative purposes only. It should not be constructed or applied as an investment advice, recommendation, or a suggestion. Now, guys, one of the most common questions is how to get access to this webinar after it's, if we can get a recording or something like that. And of course, the answer is as easy. You just go on YouTube, on our channel. Usually, it happens on the same day, but without any commitments. You just go to our channel. It's not only this webinar, by the way. It's all the rest of the webinars are uploaded, should be uploaded to YouTube. And can be later on reviewed as many times as you want. And I think there is a way to download videos from YouTube, but again, I'm not getting into that because it's not what I'm here for. Okay, so I'm gonna go for a few minutes to make sure everything is recorded, and then we'll hit the road. So I'll be right back. Thank you very much. All right, so we are back, and we're simply gonna take off. Like I said, this is a live Q&A webinar, which means you guys are allowed to ask whatever question you want, regardless the topic that I'm teaching. Okay, now let's review together what we have. And okay, so the first question is, can I change my leverage? The answer here is very simple. Simply gonna write it down. Leverage is determined by the regulation, depending on the region, and in special cases can be we're not changing the leverage. Okay, there is no way to change the leverage. Whatever the regulation is giving us, this is what we can give, but there are different accounts that can have different leverage, and this is why you can address your senior account manager and see what can be done. But in special cases, specifically can be addressed to your senior account manager with a request to change the leverage. Okay. Again, it's not something guaranteed. That depends on some intervals. This is why I'm not getting into that. What is more important, analysis or RMM? That should have been this way because not everybody knows. Okay, what is more important, analysis or risk money management? This is actually a question that I'm gonna show the answer on the chart. Can I get devoted personal assistance from AvaTrade? Yeah, this is actually also this one we're gonna take and break it down. I'm doing okay with one instrument. Should I diverse? Oh, this is actually a very common question. This is, I think we had this before. We actually had this before. How different lot size affects margin impact? This is actually also a good one. This is a good one as well. Okay. Yeah, let's first paste it down. So we will have some nice sheets to work with. Okay, let's just break it down a little bit so we know how to explain it without causing any confusions. Okay, let's begin with, never mind, let's begin with analysis. Then maybe it will be easier to just understand the comparison here. I'm going to tell you even before I start explaining that this question is unfortunately, well, some people can say otherwise, but for me it's 50-50. Okay, I don't know what you guys think. Before I'll explain that obviously they are both equally as important, right? At least to my opinion. What do you think, guys? What is more important, analysis or risk money management? If we could put them on the scale, right, and see who weights more. So what do you think? For me, it's 50-50, right? I would give it 50% and 50%, right? That's what I think. Okay, so George, you think that analysis is more important? Okay. Okay, that's, again, this is your opinion. That's completely fine. Okay, Eve, you were saying 50-50 as well. That's okay. All right, let's try and understand what is happening here. So in analysis, we have fundamental and technical analysis. Basically, this might be the reason, okay? And the other one is tendency, right? What do I mean by tendency, guys? Each asset has a certain range that it can fluctuate across, right? Every asset has his own range, if you can put it this way. And you can analyze technical analysis. That can be, let's just write it down. Okay, let's just write it down. Technical analysis. Okay, information from the charts, averages, ranges, support and resistance, okay, Fibonacci and many more, indicators, okay. While fundamental analysis is more information from outside the charts. What do we mean by outside the charts? News, events, occurrences, decisions, and so on and so on. Now this part I'm going to paste down for you to have. Okay, it doesn't change the fact to what I said a minute ago. I think that both cases, technical and fundamental analysis, not to mention that they need to be combined. I just spoke about it yesterday, I think. They need to be combined, okay? Beside the fact that they need to be combined, they don't have to be, it's not mandatory, but it would make sense that they do. They are standing on the same level with risk money management. So when someone, if is a beginner, I'm gonna learn, let's put it in the chart, and then we'll understand a bit better, right? So risk money management, the definition for that is to manage margin, usage, potential losses and profits. Exposure in acceptable way. Again, I don't want to use, fancy words. The best way, the ultimate way, okay, because everybody has their own numbers and everybody has their own balance. And my balance right now is $10,000. That doesn't mean that everybody can have $10,000 tomorrow in their account. Okay, so whatever I'm teaching you now, you should correlate to your own numbers and your own behavior and your own free time. Okay, it doesn't need to be the exact same way that I'm explaining, but it should work universally. Okay. Now let's dig in and find ourselves some nice asset to work with, which can be yesterday what we had. We had coffee, I think, right? Corn. Okay, actually corn might be good for us. It has a signal as well. This is also, by the way, this is also part of technical analysis, right? Not many people know that, but signals, they are technical analysis based. They can be based on fundamental analysis. I mean, if I see some news regarding the dollar, the government decision, I can go onto the chart and see how the currencies are fluctuating, and according to that, I can understand what to do. Okay, but the signal that I have here is based on support and resistance, and it's showing me here a certain pivot point that I can rely on. And I have two scenarios, with a buy or with a sell. Okay, I'm gonna just go ahead and change. Oh, the validity here is days. It's fine. You see, I can place lines on the chart, and this can be a wonderful hint to my analysis. Yeah, it doesn't mean that I can rely on it blindly. Again, we have risk money management and some other things to do, but it's a nice direction to be as an addition. Okay, let's put it this way. Okay, right. Let me just to clarify. Okay, this interface here is called the Web Trader. To see what I see, you just need to log in with your email and password. If it looks different, just contact the customer service on their email, cs@avatrade.com, and they should fix it for you. But sorry, in general, it's supposed to look like this. Just a second, guys. I think my voice is disappearing. Hold on, I'm sorry. All right. I'm hoping that now we're okay. So we have corn here, and what we're gonna do is we are going to explain the below on the corn. Okay, so let's begin with, I'm gonna do things quickly just to actually I'll explain about the process. When I explain to you about the process, because this is a webinar, I won't try to teach you as much as we can. So let's suppose that my chart is this way. Okay, this is 1 minute. I'll give you also a nice guide through about that, just a minute, to understand what we're doing here. Okay, so the first thing that I did is I just expanded the chart. Second thing that I'm going to do is I'm going to click here in the middle where it says crosshair, and I'm going to click on crosshair, and then I can get data from the candles, which I can't with a regular Corsair. Okay, yeah, so I'm going to switch it to Corsair. And now what I'm going to do is I'm going to click on sell or buy to open the sidebar here. Okay, and let's just present what is going on here. Here I could change it to lines. Okay, here I can have another asset if I want to have gold and corn, or just corn and then I go back to that. Here I can have an indicator. Right now, let's go with the Bollinger Bands, just as an example. Hit save. Oh, let's see the settings here. Okay, that's fine. All right. I'm gonna change it from 1 minute to 1 days because my trading style is weekly or intraday. Okay, sometimes swing, but this way for now. And I'm also gonna add some support and resistance line. Okay, resistance. Just before I do that, just want to explain the concept about support and resistance. Maybe it will be easier to comprehend this way. Oh, sorry. Just gonna put a rectangle around it. Yeah. Okay. Right. So if this is my focus and I see here on certain levels that, just hold on, guys. I'm going to explain to you that in a GP. Hold on. Should be a little lower. 27. Okay. Okay. Yeah. Now, sorry, 45. Okay. And this needs to be 37. Okay. Now, the reason that I did what I did, okay, is because if this is my room, I don't know if you can see, but the price now is 432.75 is the sell, this is the buy price. And I have noticed that it's slightly below, as you can see, there is the price over here, right? Which we see that it's right around the middle of the consolidation area. It went a little above 440 a couple of times, but the range is roughly 427 to 440, I would say, around that level. And I have a reason to believe, I'm just going to get rid of that. I have a reason to believe that the potential movement can be bullish. Okay, why? Because it's been rejected from the sellers. Now we see a strong buy. This is yesterday. Okay, because I've switched this to days, you can see, you see here, if I'm looking at the difference between candles, oh, you're not going to see that. You're not going to see that. Maybe you will. You see, this is the first, this is the second, this is the third. Each candle is 1 day, right? Now, because yesterday it's been rejected, and I can see that there are two thin lines coming out of the candle. Okay, I hope you can see it. That means that it was reversed. Okay, it reached the support line. Support is the edge point from the bottom. Always will be, if this is my room, supposedly, right? So this would be my edge point from the bottom, 425. We could safely say that it breached the support, but it didn't go all the way down. Otherwise, it would have carried on, right? But it did not. Okay, it's been rejected a couple of days ago, and yesterday it was reversed. And today we're experiencing something pretty indecisive. Okay, so that can be interpreted both ways. It could still be a sell, and it can go down to that level or even more, or it could be a buy, right? But I have a reason to believe, because it's been bearish twice, that it will be bullish twice as well. I can be wrong, but okay, that's the logic behind what I'm doing. So all of this is called technical analysis. There are other levels of resistance here. This one is an example, and that one as well, right? You see a couple of times it's been rejected. That one as well. Of course, if I'll go a little higher, if You see that guy over here, okay? Okay, and thanks to that, usually I would add all kind of things here just to justify my decision, but right now we don't have time for that. So I'm just explaining on a nutshell. This is the preparations that we usually do. Okay, 2 lines at the bottom, 2 lines at the top. You can have more or less. I'm gonna click on take profit and stop loss to secure automatically the results of my position. That means that this helps me anticipate what I can make or lose. That means that if I'm gonna go to the bare minimum, let's go for 0.01, and I'm gonna look at corn, okay, 432. Let's apply the ATR just to see how much it can move. I'm gonna change it to days. If you wanna know how to use it, we have another webinar for that. We have applied it for the past 10 days. I see that it can move 5.8. I'm just gonna go with 5. And I'm gonna modify my take profit from 432 to 437. And I see that for $5 up, I can make $5. Make a lot of sense because I only have 1 unit. Oh, it doesn't let me change it. I just wanted to add, there we go. Okay. And stop loss, I'm gonna use the same simulation. So 537, sorry, 437. Where is our, okay. It doesn't want to go with our numbers today. Okay. Now we have, oh, we wanted to make it green. Okay. In here, we're gonna have it 427. Okay, and the same potential loss. Okay. Right. Great. Now we can see that the potential profit is $5. This is again $5 potential loss. We're going to increase it, increase. Now I can make 50. If I increase it even more, I can make 100. If I increase it more considerably, I can make much more, and that's fine. Now, what I did now is technical analysis. Let's suppose that right now I'm hearing about, I don't know, something fundamental that corn has been this year because of the weather. We anticipate 250 tons of corn to be declared as useless. Okay, due to the weather conditions, we find out that corn, unfortunately, we lost from the storage 250 tons of corn. I have to tell you guys, it's nothing. 250 tons doesn't have a lot of impact, but just for the sake of the discussion, let's suppose that due to weather conditions, there was a change in inventories, and now corn is difficult to transport, and the inventory has took a hit. Okay, now because we have less supply and the same demand, what do you think that will happen with the price? What do you think, guys? If we have the same demand and we have less supply, what do you think that will happen? Anybody? What happens if we don't have less supply, same demand? This is very basic, guys. So what happens is the price can increase, right? If we have less to supply something and we still demand the same number of quantities, that means that the price can increase, right? It's more desirable. It's not always this way, but when it comes down to the example I gave, it could work this way. Now, when I'm looking at corn, to justify my analysis, as I said, I wanted to go with a buy, and I see something fundamental that justifies my buy. I can safely go with a buy. Okay. And in case, God forbid, I will lose, I see that potential here, potential loss is 250. This is actually 2.5% out of my balance. So if I would want to explain to you about the risk money management, this will be 2.5% out of my balance, which is, maybe it's acceptable. But let's suppose that this wasn't the case, and I would go with 2 lots. Okay, 2 lots brings me to 1,000. 1,000 out of 10,000 is 10%, and 10% is quite. I don't know. I don't know how. Okay, actually, I'll explain about it just on a nutshell, because this is what the question wants me to do. 10%. That means that for this position, I can lose 10% of my balance. So if, for instance, I diverse with another 5, I'm half of my account is in risk. Okay, that's basically the idea. Now, if I'll exaggerate and I'm gonna go with 2.5, I can't even do that because I don't have enough margin. Let's go with almost the max that we can go with. Let's stay with 2. Why not? Okay, if I wouldn't have a stop loss, this is also part of risk money management. If I wouldn't have a stop loss, and God forbid things go against me a little more drastically, and it goes down to, let's say, 415, I can lose a third of my account. Okay, can lose more than a third of my account. I'm using a stop loss to simulate, but if I wouldn't have it and it gets to here, I can lose 3,500, right? Right, great. So let's carry on. As I said before, I think, to my personal opinion, analysis and risk money management are equally important, and they need to be addressed, okay, as part of the strategy. Of course, nobody has to do what I say, but you understand the, just a second. Yeah, you understand the consequences if we don't use stop loss and we don't do risk money management. Okay. Can I get do we have any questions? I nearly forgot to ask. Guys, do we have any questions about anything that I've explained so far? Anything that I said, anything that I did, any questions or something that wasn't fully understood? Why did you draw the lines? Okay, Freddie, you're asking why did I draw the lines? Which lines? Those lines? The upper ones? Yeah, well, if I always put the lines, well, that depends. Look, the idea with the lines, it helps me remember what I do, because if I'm trading corn and it's part of my portfolio, I don't want to analyze it every day from scratch, right? There is a question here about diversification I saw. You see, if I'm putting those lines and tomorrow I analyze the chart, see, I'm going back to corn. I know exactly what I did. I know exactly what I did. I know exactly what was the support and resistance. I saw. I have the ATR applied. I have everything ready for me. I don't have to waste any more time doing the preparations. I've already done it. So if I always put the lines, no. If I have to put the lines, no. But I also don't have to use any of those, right? I'm just doing it because it's better to to do it, right? If it makes sense. No, but of course it's up to you, and the colors as well. You don't have to paint it. Yeah, I hope it helps. Okay, let's paste the question. Oh, right. Why did I place the lines? I'm sorry. The reason that I've placed the lines is because you see in here there is resistance, in here there was support. We had it this way, and I've placed it to capture my range. That's the main idea. Okay, that's the reason why I've done it. Okay. I'm doing okay with one instrument. This is a very common question. Should I diverse or increase? Okay, so let's suppose that we stick with corn, and we're doing well with corn. And as I said before, let's go with something like that. We can make or lose 250, and that's not bad at all. 427.75. Okay then. And I want to increase. Now, what does that mean exactly, to increase? So what this question is actually asking us, what is doing well? Let's suppose that, let's suppose what is exactly doing well? I mean, this needs to be explained a bit better, but let's suppose that doing well is making just a bit of money, and now we want to make more money either with another asset or with corn. Okay, with the same asset. Okay, I'm okay with one instrument. Should I diverse or increase my trading? So right, so diversification, it has its advantages, it has the disadvantages. It doesn't really have any disadvantages, to my personal opinion, if you're doing it correctly and you're not exaggerating with the lot size and the risk money management. But the advantage is that you don't rely on one asset. So I can have corn, and I can have I don't know, let's say gold. Let it be gold. Let it be gold. Okay. Okay, it seems like we went through that, but it doesn't hurt us in any way. So what is the advantage to have another asset rather than one asset to increase the trading? Okay, that if something doesn't work out with corn, I can make money with gold and vice versa. Okay, now why did I say that it could have a disadvantage? Because if I don't do risk money management on any of those, I might be in a problem. Okay, but that applies for everything. So to my personal opinion, if you want to diverse, you can diverse. Just do it organized. Just do it organized, and the same way that you succeed with one asset, if you can apply it, the same principles in the same way for the other asset, and it works well, so you should do it. If you get tangled, if you don't have a lot of margin, if you don't know how to analyze the other asset and you're just randomly trying, you can also do that with a demo account, but I wouldn't go ahead and just fully, multiply what I'm doing to many other assets. Okay, slow and steady. That's, again, my personal opinion. Everybody can do what they want. Diversification has the advantage of not, okay, we'll correct it, of not relying on one asset and having the ability to stabilize with, okay, let's keep it this way. It just not to had the advantage to rely on one asset, and that is pretty much the answer for that. Okay, okay, so this one also I want to take a minute to speak about that. Okay, you probably heard me before speaking about the senior account manager, but this is completely different. A devoted person, like devoted personal assistants. Right, so account managers, they do give attention depending on how active the account is and depending on the eligibility. So the more you invest, the more active you are with the account, that obviously you can get an assistance accordingly. I don't know in particular about devoted personal assistants, but I would suggest I would suggest to contact the account manager and obviously to see what level of assistance can be given. But yeah, you can have a senior account manager assigned on your file depending on the eligibility and level of account. Necessary assistance will be given. I don't know about the exact definition of the question here, but I guess it's pretty straightforward what I wrote down. So how different lot size affects margin impact? Let's see it together. Let's of course take the question here. We'll review it on the chart. Let's also go back to one chart. Okay. Right, but let's also diverse with the explanation. So this way you guys can enjoy more asset and more yeah. Let's go with Euro USD. I could by the way, I want to show it to you just once. I want to show it to you that you can get it also from the chart. Okay. So let's suppose I want to open from here. I want to open an asset. I don't want to get out because I have stuff here that I want to keep. So I'm going to simply click on here, put down Euro, let's say USD as an example, pick it from the list. Yeah, very easy. Then again, buy, going to change from no Corsair to Corsair. We have the chart all the way up. Okay, very good. And let's understand just a second what's happening with how the different lot size affects margin impact. So we have something called price per unit. We also have the units, which is the lot size. And if we multiply both, we get the value. Let's do it together one time. So the value is 1.08564. We now have, let's go with actually let's go with the bare minimum and then we can climb vertically. Okay, we have 1,000. We don't really need a calculator for that. Okay, but if you don't believe me, it's written here, right? This will work similarly. Oh, what did I do? Oh, sorry, forgot to put the decimal in the right place. Okay, see, exactly the same. And we have leverage. The leverage multiplies buying and selling. Okay, and as you can see, the leverage here is 1 to 30. Okay, and the last step is value divided by leverage equals margin impact, which in our particular case will be 1,085 divided by 30, which equals to 3690. Okay, and also margin impact. Now, this is case 1. Okay, this is with lot size of 0.01. We're going to have 3 cases, so you can have a quick comparison on what's going on here. This will be with 10. This one will be with 100. This one will be with 10. And we're simply gonna see sorry, that is not correct. That is correct. And we're simply gonna see it on the chart. Okay. Right, so let's increase that to 10. As you can see, that became 10,850. Okay, and that one became a 108. Okay, very simple. Oh, I forgot to change. You see, that also means that the margin impact changes as well. So that one, did we change it? We change it. Okay, no problem. That needs to be changed as well. Now let's review quickly what is happening here. This is the first, right? Let's also maybe separate it so it will be easier for us to understand. This is case one. This is value. Oh, sorry, that needs to be down. Also needs to be down. Okay. Right. So the first one is 0.01. The second one is, sorry, this is the first one. That is 0.01. The second is 0.1, and the last is one lot, which equals to 100,000. Now we started this way. We saw that when we take 0.01, we need, the value is 1,000, and we need 36 because we divided the value by 30. The second, we have 10,000, okay? And with 10,000, we multiply the value here by 10,000. Therefore, we need 10 times more. And divided by leverage, we also need 10 times more in the margin impact. In the last example, we have one lot. One lot equals to 100,000. You can also confirm it through here. You go to your instrument details, and you'll see that the lot size, sorry, the lot size, oh, there we go. The lot size is 100,000, okay? And in that case, when we multiply the value here by 100,000, this is what we get. Okay, as you can see, this is what we get. And if we divide it by 30, this needs to be this way, and that needs to be this way as well. Now, the same way that I did that for you today, you guys can simulate on the platform by yourselves. You can just go click on the minus and you'll see the numbers changing. Just go and click on the minus to see the numbers changing, and just adjust, simply adjust the lot size to your needs. Okay, you see how it keeps going down? But at least now you understand the logic. You now understand what is going on here. You have the sort of price. It's not really a price. It's just the difference between, this is how many dollars I need to get, 1 euro. This is how many dollars are required for 1 euro. Okay, I don't know if you guys remember, but there was a point. There was a point in here. You see what happened down there? 0.97. This is where the dollar and the euro were at the same value. So this is when you could get $1 with only one euro with $1. Presently, you need a little more than a dollar to have a euro. Okay. Now, this comparison here lets you understand the margin requirement, how much money you're actually using, not money you're using, how much margin you're using into the position, and then to do the right management. Of course, I have 10,000, so this is easy for me to take. But if my account only had $100, then I would need to know that. Okay, this is a powerful tool to know. And yeah, just gonna write it down here in the shape of an explanation. Okay, lot size determines how many quantities I acquire on my position, and accordingly my necessary margin. Okay. All right. Before we say goodbye now, I want us to share with you some links. We're going to share with you some links to save you the trouble to look for your to look by yourself in the website. We don't really need that anymore. To be honest, you can have it through here. Okay, at the left bottom corner, and you can either click. Let me just find the chat here. There used to be. I think it's that one. I really hope that this is the one. But the link that I'm sending you is also to get some nice written explanations and videos and some more educational material. Okay, this one is to log in and make a deposit. This one is for further questions for the FAQ in the help center. And that one is for real account, if you had enough with a demo. And this is for the academy. As I said, this includes videos and tutorials and explanation of all kind of things. This is in addition to what we're teaching on the webinars. And lastly, we're going to give you here the special promotion code that allows you to receive a one-on-one premium market review. You remember that question from the beginning? If you can get a devoted, devoted personal assistance. So this is the code that I'm giving you now allows you to receive a one-on-one premium market review with your senior account manager, which, to my personal opinion, there is nothing more controversial to your progress than to have a nice premium market review with your account manager. You can ask more questions about analysis, much more into depth than what I showed you today. I wish I could show you more, but guys, remember, keep in mind, I have 5 questions here that I have to cover. And usually my time with you is limited, and this is as much as I can. Even now, we barely have 2-3 minutes before we say goodbye. So with a senior account manager, a full session just with you, I think it can be an excellent idea. So save the code and give it to your senior account manager. And yeah, it's been a pleasure. I hope that I was able to cover those questions successfully, as much as we could, of course. And that's it. I wish you all fruitful week to make a lot of profits. Best of luck with trading, and have a good day.